All right, everybody, let's go. So today we are talking about where do I think the markets are, right? So where do I think the markets are? What are things going on? And we're going to do our best to take a look at that, looking at some stock charts to back us up. So first and foremost, I want to go ahead and say to everybody that there are, you've heard the saying, there's 1,000 different ways to skin a pig. Well, when it comes to identifying which way a stock market is going to go, there are 10,000 ways to determine which way a stock market is going to go, and none of them are exact, right? Let's get that straight first, right out of the gate. That ultimately, everybody, there are millions and bajillions and levels of dollars that I can't even explain to you. I don't even know the name for them that goes into that amount of money that goes into determining what we're talking about right now. So when there's a billion different ways to do it and none of them are exact sciences, the reality is, in my opinion, it's the best bet to kind of pick your niche, find what works for you, and really try to hone your craft as opposed to trying to take in all these different variables, and you're never going to make it. So, having said that, we're going to look at some stock charts, and that's what I like to do. That is my way to do it. I have always looked at stock charts. It's the way I feel the most comfortable and the variable that I feel the most comfortable with. Now, having said that, just like all the other methods, stock charts are not an exact science by any stretch of the imagination, but we're going to look at them and kind of interpret where we're at, and maybe based off the stock charts, where we might be headed, right, in the short to mid-term here, and even into the long term. But here we go. So jumping right into it, so what do the charts say about the market? Let's hop right into it. Here we go. So first, before we do that, I do want to mention a couple topics. I do want to cover a couple topics real quick, just so we can kind of make sure that we know what they are when we're looking at stock charts. The first one is going to be support and resistance. So essentially, what support and resistance are areas where people who are active stock traders might look to buy or sell a stock based off its past behavior, right? So for example, when we're looking at this little chart right in front of you, you can see on the left, the stock had been coming up, hit a little high, bounce back, hit it again, bounce back, and then finally went through that red line. Up until that point, that red line had been called what's called the resistance level, right? The stock hit it once, hit it again, and now people are starting to start getting familiar with that price point, and they're like, when it gets to this price, it goes down. So it really needs to break through that level in order to be able to continue trending in one direction or another. And then likewise to the downside, that would be what's called support, right? So when a stock hits a certain low and then investors like, this is the level I want to buy it at, and it bounces from that level usually, that was what's known as a support level. So likewise, when we break through a support level, that usually is indicative of, lower prices, and then we are looking for a new support level, which will kind of come into our talk here in a second. So moving on to the next topic I want to show you is moving averages. So essentially, you're looking at a chart right here with a bunch of squiggly lines on it, and those squiggly lines, what you are looking at, you guys, is a stock price moving, and then the two lines you see before you, the red one is what's called a 50-day simple moving average, and we'll call it dark blue one is what's called a 200-day simple moving average. So essentially what those lines are, the red and blue one, is they take, for the 50, they take the last 50 ticks on that chart, the closing price of those last 50 days, and they basically add those 50 prices up, divide it by 50, and that makes a little dot plot on the line. And every day, one price will fall off, a new price will come on, and that will change the average, and that's how you'll see that line start to move. Likewise, the 200-day moving average, that one is going to have the last 200 ticks on that chart, right? So that one's going to move a lot slower because if you remember your exams back in the day, when you got a lot of questions on the test, you can get a couple wrong. It's no big deal. It doesn't really affect the grade that much. When you only have a couple questions, it affects the grade a lot more. Likewise with moving averages. The lower you make an average, the smaller you make a moving average, the more rapidly it will move because it's incorporating less numbers, less days, or less time frames, and the 200 will be moving a little bit slower generally, or the longer you out, the slower it will go. So let's hop over here and look at some stock charts. All right, so what we are looking at here is the S&P 500. So this, in my opinion, is going to be the best overall indicator of what the market is, because the S&P 500 contains 500 of the biggest stocks in the market, and therefore it shows, in my opinion, the widest, most accurate representation of where the market is as a whole when you're comparing it to the other major indexes like the Dow and the NASDAQ and things like that. So we're looking at the S&P 500 right here, and this is a 5-year timeline. So this is the S&P 500 over the last 5 years. Now, what I want to make a note of right out the gate, what I want to make a note of right out the gate is that when you're looking at these moving averages right here, right, you see I have my moving averages. These are a little bit different than the ones I just talked about, and the reason for that is because in order to make this 5-year timeline look nice and pretty like this, I had to make each one of these bars 1 week in time. So each one of these bars is a week, not a day, right? So this bar right here, you're seeing right here, that has both Thursday's crazy negative day and Friday's piled into one bar, and you can see when they add up and stack up on top of each other what that week looks like compared to the other weeks that we've kind of been experiencing over the last 5 years. So what I want you to see here, going back to our topics, is we're going to talk about support and resistance, right? So when we look at this chart here, we don't really have any sideways movement to really go off of like I showed you in that graphic before. So if we're looking at the chart, and this is going to be very, very general that we're looking at this here, you guys, you can see right here, our support and resistance levels, we're going to be looking more so something like this, you guys. Something like that, right? So we don't have a straight line. So when we're going up in an upward trend like this, here is our trend. And you can see here, kind of like I was just showing you that chart there, every time it gets up to that resistance level, it kind of turns away, support level. So I've made my own little trend right here is what I've done for you guys. And you can see very, very steep upward to the point where, going back to our moving averages, you can see how we kind of come back and flirt with our moving averages and we interact with it. We had gotten really far away from our moving averages, and we're in this really firm trend, which is upward. Well, now back here in March, we fell through that trend line, right? So what would have been our resistance, this line right here that I'm kind of highlighting here now, that one got broken, right? So now we have broken through that support level. I'm sorry, I said resistance before. We broke through that support level, and now we are looking for a new support level. And oftentimes, I'm going to delete these for get rid of any confusion. Oftentimes when we break support levels and we don't have a real firm trend, these moving averages act as resistance and support. It is very common to see the stock market bump into its moving averages, especially the main ones like the 50 and the 200-day moving average, because they're so commonly used, and it act as a resistance or a support. So what I mean by that is you can see right here as it came down to that average, that 50-week moving average, it was our first time interacting with it back here since 2023, and we paused there for a second. That is acting as a support level, bracing itself and giving us a pivot point to see whether we're going to break through that support and now be looking for new support levels, or whether we are going to bounce off that support level and let its integrity be held. As you can see, based off the back of the tariff news, we plowed through that support level. And now when I'm looking at this stock chart, basically what it means, right, what I'm looking at is I'm looking for new support levels. Where can new support come in and buyers feel comfortable to say, this is a spot where I can see some bounce? And for me, what I'm looking at is based off this range here. Now, I am not sitting here saying that this is going to happen today, that this is going to happen this week. Could it? Absolutely it could. You're seeing how aggressive this move has been over the last, really, we'll call it 2 months. Look at this. From February 25th to where we are today, it absolutely could happen that rapidly. But looking for where the next support level is, from what I can see looking at these charts, I'm zooming out, I'm looking for either right here, right? I can draw a line right here, maybe these levels right here, these previous highs that we saw way back here in what year, when was this, 2022? Maybe. Right? But the only real firm one that I can firmly see for you guys, get this out of here, is a 200-week moving average. Right? So I definitely think we have gotten there much more rapidly than I would have thought that we would have been able to get there. But then again, everybody, we live in a day and age where you can place trades, stock trades on your phone. Computers place trades. So when you see something like this right here, this is indicative of the new world we live in and technology, where it's taken us and how quickly things can change in a world where you have things at your fingertips, right? What I'm looking at is that 200-week moving average. That is the next support level I'm really realistically looking at. I'm looking like to see what happens with the stock market once we get to those levels, but with no real clear support line in sight, I think that we definitely sooner or later are going to see ourselves make our way to that 200-week moving average. So the two ways that could possibly happen, right, is the market could find some feet here and kind of start moving sideways and let that average catch up to it, or it can meet it down there and it can basically continue to fall down and meet that average right there. And then at that point, we will have to see where the market goes from there. So, you guys, summary, this has been a very extreme move. Please do not react with emotion and based off what the market's doing day to day. You need to be making your decisions based off of what your plan is and how this affects your plan, and making sure that you're putting a strategy together that works for you. Consult your financial people and make sure you are making the best decision you can. These types of markets are going to invoke a lot of emotion, and that is completely natural. Make sure you're using your brain to think this through and make the right decisions. The worst thing we can do is make an emotional response and then jeopardize our retirement plans and our future even further, right? So make sure we're not doing that. I'm not telling you to sit here and sit on your hands. Absolutely, if you feel like you need to take action, do something. And furthermore, we're going to have a video coming out right after this about things that you can potentially look to do should you want to do something and you're looking for things to do and you need a couple ideas about what you can do. We're going to talk about that in a video coming up. So you guys, until next time, thank you so much. If you have any questions whatsoever, please ask them. And again, we appreciate you being here. Feel free to give us a like and a subscribe if you like the content. And until next time, you guys, that's Finance AF. Appreciate you.